Hi, welcome back to part two of our first time homebuyer series for Fire Realty. My name is Jennifer Butterfield, your co host, the personal finance friend, and I'm here with Morgan Simpson, my other co host, and he's with Simpson Realty Group. And we are really excited about today's episode. So, you want to become a first time home buyer, and you've made that decision. Now, what? Morgan, I think this is where you're going to come in. So,
Yeah, absolutely. And thank you for the intro. It's great to be here with you today again. So there's two steps that you can take, and really either one of them are correct. So if you, I always tell people, so here locally, the credit union that I'm going to mention is University Federal Credit Union. They're really great. They're also great on the mortgage side as well. So here locally in Austin, I'll tell people, hey, who do you bank with? If it's a local credit union, I will tell them, hey, go start there, right? So go to your credit union, ask for their, and I actually have contacts for that as well. So if it's one of my clients, I will give them a loan officer for that credit union. But if not, yeah, go to your credit union, start there, get a contact for a loan officer, and let them know, hey, I would like to buy a house at some point, and I want to start the pre-approval, pre-qualification process. This is something you can do online. We'll get into the meat and potatoes of that a little later. But so that's one option. Your second option is if you already have a realtor that you know, like, trust, that you're probably going to go with, or you want to explore that business relationship, I would say reach out to them and set up what is called a buyer's consultation. And I always tell people, it's like, I will do a buyer's consultation with any soon-to-be clients, whether they're pre-qualified, pre-approved, or not. It's about a 30-minute meeting where we'll get into some of the nuts and bolts and we'll go over the process. But so to summarize, you've got two options. Go straight to the loan officer, the credit union, the financial institution, or go straight to your potential real estate representative. In either one of those, in my professional opinion, you're on the right track.
yeah. I want to back up because we went in kind of hot with this idea of like, okay, you decided you want to buy a home, now what, right? So, but let's talk a little bit about, because, taking the step as a first time home buyer can be a little nerve wracking. And it's like, I think so many people struggle with this like concept of, oh, I'll never be able to afford that. That seems to be a common thing that I hear from people. It's like maybe it's a self-esteem thing or a fear, or like I'm scared of being rejected, or so I think it's important like to talk a little bit about you know what's the difference between a desire and then being qualified, and like, is it wrong to have the desire even if you may not be qualified, or like how does that gap get bridged, right? And then
Yeah.
um, can we walk through the steps to kind of like, again, demystify this process, right? Because I think so many people are like, I don't know a realtor, I don't know a lender, like walking into a bank might be kind of scary, and like, but I want to own my own slice of the pie, right?
Absolutely. And that's a really good point. A lot of people are intimidated by the process because if you're not in this daily, you don't know how it goes. And it's a huge transaction. It's a huge deal to buy or sell property, right? I mean, it's just a big thing. So it's always right to have the desire, right? There's nothing wrong with that. I mean, that's the that's the real first step, actually, because if you're
Right.
not paying attention, if you don't want to buy a house, you're not going to take either one of those other optional first steps that we mentioned, right? So it's absolutely right to have that desire, and your next thing is you got to start asking. You're not going to get anything new in life without doing something different and asking questions you haven't asked to the right people.
Right.
So that's totally part of the process. And the other thing is, you're going to get something from it no matter what. because
Right.
the worst case scenario, you reach out and you're not able to get qualified to get pre-approved. If that lender is worth their salt, they're going to either give you a plan or give you
Right.
resources to rectify that problem. What's keeping you, what's not connecting that bridge from desire and pre-approval? They actually can offer resources and advice to show you how to create that bridge, to build it,
Right.
right?
Right.
Um, and and so a lot of times, if you haven't purchased a property ever, if you're a first-time home buyer, like what we're doing this series for, or if you're just not super established financially or in the real estate world, a lot of times you want to do this 6 months before you want to buy, uh,
Right.
because we don't know. I mean, we may look at, you may apply online with the lender and they say, hey, you're fantastic, ready to go. Here's the value. Here's your buying power. Let your realtor know, have at it. But a lot of times there's a couple small things to work on.
Right.
And so you can, those aren't going to happen overnight. If it's a small thing to get your credit to workable range, if it's some personal financing budget stuff of creating a budget over the next 6 months to a year so that you can save up a down payment or
Right.
whatever it is, you need the information sooner than later so you can start making those moves in the right direction.
Right. So don't be afraid to ask. Don't be afraid to go in, even if you don't think you may qualify right now. It's like going in a way where, you know, and I guess this is kind of leading into the next part of this conversation is what if somebody doesn't know anybody in the industry, doesn't have, a reputable lender or a reputable realtor. What would you suggest they do to find somebody that they could trust to work with? What does that process look like? And I want to speak a little bit about like the credibility with realtors. I think there's a difference between going and buying a car, because that's like the big transaction initially, right? Like in life, a lot of times we go purchase a car when we're however old, right? But like buying a home is much different. Like my mom's been a realtor in Austin for 30 something years, teaches real estate. And, the Texas Real Estate Commission, these contracts that are created are promulgated with the Texas Bar Association. So, like the attorneys, this is like the first step for a lot of people in building out generational wealth, but also like their family office, right? So you have this
Sure.
network of professionals that are advocating for you and your wealth, and like feel free to speak to the fiduciary responsibility, but I'm curious, like, how would they find somebody, right, if
Sure.
they didn't know anybody? And can you speak a little bit to the ethical integrity of realtors?
Yeah, absolutely. Those are good points because there's people out there that may be watching this that say, yeah, I mean, I don't know either. I don't know anybody in either one of those positions, right?
Hmm.
Let's say I bank with a big bank. I don't have a credit union relationship. I don't have a loan officer relationship. I don't have a realtor relationship. Um, like most things, you want to start with people you know and trust,
Yeah.
who potentially have those things. So people who, your peers who recently purchased a house, family, friends, whatever, that may have those resources for you. I would start there, reaching out to them and saying, hey, do you have a good contact that you would want to refer to me?
Right.
And make it apparent that my suggestion is make it apparent that don't just send me someone because you know their name. Send me someone that you would actually feel like is going to come and take care of me, right? And be a trusted advisor when it comes to real estate for me. And that would kind of segue into your next point, the trusted advisor. And look, there's a lot of people out there in their heads, they think there's very little difference to, let's say, a realtor and a car salesman. And, there's people there's realtors who are watching this maybe who are going to cringe when I even associate the two things because
Yeah.
they know why it's so different, right?
But we want to
Uh,
point it, that's why I mean,
mhm.
it really
Yeah.
is. Yeah.
But I figured let's face it head on, bring it up. And there's a huge difference. So when you go to buy a car, right, the car salesman works for that dealership. They're employed by the dealer, and their job is to sell you their product. Whatever, and really probably the most expensive product that you can get qualified for, that you're willing to buy within that dealership. That's their job. So they don't have a fiduciary responsibility to you. In other words, they don't have your best interest at heart. Doesn't mean they're bad people. Doesn't mean they're going to try to scam you necessarily. Some do, some don't. But they don't have a legal fiduciary responsibility to you. When you go in contract with, we're talking about buyers here. So when you go in a buyer's representation agreement with a realtor who's going to represent you, they have your best interest at heart. They have to. They literally have to remain in ethical good standing, right? With the governing bodies that we have over us in real estate. So in other words, you have a person, and I tell people this, I think it explains it decently well. If I'm selling to my clients, I only ever sell to my clients really one time, and that's before they become clients. Of course, I have to sell, or at least give the message of what my services are and why I'm the right person to help them, right? But once they become a client, that shifts to I'm your advisor. I'm looking to protect you. I want you to be happy, not just a month, a year, 5 years, 10 years down the road with the transaction that we did. And I'm not trying to sell you any one product either. That's the beautiful thing is when I'm your buyer's representation, when I'm representing you as a buyer, we have multiple products to choose from. So it's my job just to kind of walk you through the marketplace and guide you. And, obviously point out pitfalls and say, hey, watch out for this trap, and provide all the resources so you can do due diligence to a level where you know what you're buying and you know the risk and that kind of thing. So there's a pretty big difference there because, again, as a buyer's agent, our job is just to do what's in the best interest of that client and find the best fit. So we don't start with a product and then find someone to sell it to. We start with a representation relationship, and then we together go find the product.
Right. And you are there essentially, just to summarize in response, like presenting the options and utilizing your experience and understanding of the industry and your knowledge in the industry and presenting those with the options, and they get to decide, right? Like
Yes.
what's going to be best for them. And on the seller's end, I mean, we're talking about buyers, but just to kind of foreshadow, but like the seller's end, I mean, their home is the product. And so you are an advocate for them in that negotiating process too. I love it. I was going to say, I think that in terms of utilizing research, and I do just want to add, because my mom has been teaching real estate with Champion School of Real Estate for quite some time, and it is a rigorous test to become a licensed realtor, and there is so much continuing education, and there's marketing and ethics and commercial, residential, and legal, all these elements to the coursework to become licensed, and then maintaining your licensure too is a whole different thing. And so it really is a big difference, and I think it's important we point that out because, again, I think your first realtor is again like that first step into developing your trusted team of professionals and building
100%.
generational wealth. So I want to ask, okay, so say we've been doing due diligence and our research, and we're narrowing it down to the point where we're contacting a realtor or two to, perhaps see, an interview process and create this buyer consultation, and I'm being upfront, I'm saying, I don't know if I'm qualified yet, but I want to go this route instead of the lender route to take my first step. do you have time for the consultation? Can you tell me what exactly a buyer consultation is? What is the realtor client relationship in terms of, from that point? And what do you talk about? What elements does a person need to consider in getting approved?
Sure. Yeah, and that's a really good point. The buyer's consultation is almost like, it's funny because on the agent side, it's our first step of almost qualifying if we're a fit with the buyer.
Right.
And the same thing on the buyer side, right? Because this is a business partnership, a limited time partnership, but it is a business partnership that you enter into. We can't do our job without a cooperating buyer, right? And they really can't achieve their goal without someone who's going to fit and fall into the right ways of communication and explain the process and that kind of thing. So it's almost it's almost like a little date or something, if
Yeah.
you will,
It's like a
before you
first
get.
date.
Yeah, it's a date before you get married and sign the buyer's representation agreement. And even that, marriage is a little dramatic to say for that term, but still, it's like a pre-date, if you will. So as far as that goes, of like, what should you look for? What should you expect in a consultation one? That's a good first step. If you pick up and you call an agent and you say, hey, look, I'm not pre-qualified yet, but one of the things you can do is say, hey, I want to go see this property. I want to go start seeing properties, next week. That's actually, in my opinion, a telltale sign. If they don't try to tell you, hey, let's have a buyer's consultation and schedule that, that's actually a red flag on the buyer side to say, why are they not wanting to do this step with me? And a lot of agents just don't do it. And I totally get it. Look, we get busy. And a lot of times you see someone's calling, your job is to sell houses, and they want to go to a house to potentially buy it. And you kind of get tunnel vision and rush into that. But I think that's a disservice to, it's a definite disservice to the buyer to not have that consultation in some form. It doesn't have to be an hour-long plus meeting. It can be something quick. But there needs to be something there where they're going over the outline of the process, and more importantly, they're asking questions from you of how do you want to communicate, what's your timeline, criteria, all these kind of things. Because if they don't really know what you want, or at least what you think you want now, there's no way they can better help you. I mean, there's no way they can really assist you properly. So that's an important, that's kind of an important first step, even before you get to the consultation. Are they offering that? And then once you do that, are they thorough? Are they giving you an overview of the process? And I'll caution people on this. I'll tell them, like, look, I'm not going to give you everything now because it's too much.
Right.
And it's not because you're not capable or anything like that. It's just you don't do this every day,
Needs to
right?
sink in.
Yeah.
Yeah.
If I came to whoever's job, and let's say they're a mechanic, and they started showing me how to work on a car, it's going to take a while. You better go step by step. If you show me too much, I'm not gonna know what's going on. So yeah, I mean, that's a really important first step: getting the consultation, having that overview of the process, having them go over next steps. So I think if I was a buyer with the knowledge I have, and you said, hey, you have to go hire another realtor, how are you going to go about it? And let's pretend I'm in a market where I don't have relationships with other realtors, right? I got to go into a new market, I'm moving out of state, and I want to find a realtor to represent me. You're going to want to make sure the basics are checked off first, right? Do they have, obviously, they need to be licensed, they need to be in good standing with whatever organizations for their state. So for us, we have TREC and we have TAR, and then we have our individual boards. But so they need to be licensed in good standing. They need to have some experience on the type of product that you're looking for. So if you're looking for, single family in Austin, they need to have helped people buy and or sell homes in Austin, right? They need to have enough transactional experience. So once you get past like the basics of they've got the experience, they're in good standing legally and all that good stuff, then you move to fit, right? I'm not going to be the very best, even though I may think it. I'm not going to be the very best realtor to represent every person in Austin because some personalities are going to clash. Some people do things differently. I mean, we all the time on my team, we will turn business away if we're not a good fit, right? And I think both parties should absolutely do that. If you feel right away the fit is off, it's probably not going to get better through the deal, right? Yeah. I mean, a lot of times people put on their best face on the first date, right? So usually people don't increase their behavior in a flattering way as things go on. It goes the other way. So that's a lot of it. So how are they going to communicate with you as far as which medium? Text, call, email, what you're comfortable with, what's it going to look like to schedule properties, how often, are there certain days you're going to have outlined so that, every Thursday we're looking at property, we have a standing appointment and we'll cancel if there's nothing to look, there's all these kind of things. So at that point, you really get to a fit scenario. Do I like this person enough to want to just work with them? You don't have to come away saying this is going to be my new best friend. Sometimes that happens, but a lot of times it doesn't. I mean, look, we do business with people that, and not on the client side, but on the other side of the transaction, sometimes we have to do business with people we don't even like, right? It's just part of life, but you can at least make sure that you enjoy the person enough to where it's going to be a nice business relationship.
Right. Absolutely. And you can trust them and you can talk openly with them. And honestly, I think that's so crucial in any professional relationship. All of this is really, really helpful. And I think too, I'm curious. So say, I want to go with this particular realtor. Can you talk a little bit about what the legally binding aspect of, without giving any legal advice, but from a realtor's point of view, what a buyer's representation agreement is? Because I mean, I think, if I'm going out to see properties with one realtor and I'm about to sign a buyer's rep agreement with another one, I mean, that could get me or them or even the sellers in a whole bucket of hot water. And I think it's important to talk about that.
Yeah, 100%. And what I'll do is to get away from, obviously talking about legal advice or even, being on the fence of giving legal advice, if you will. I'll talk more of like the spirit of what that document does and the purpose of it, and maybe the importance of it too. So, I mean, it is a binding agreement and it's a contract, but I actually even look at more of the power is in the ceremonial psychological part of it, in a sense of you've decided you want to work with me. I've decided I want to work with you. We're going to sign. We're going to make it official, right, on paper. And that brings up another really good point. There's a what I would call, not to be rude, but I would call it a little bit of a fool's strategy that some people deploy, where, hey, I know what I'm looking for. I'm looking for this specific thing. Why don't I have 3 or 5 realtors looking at it? And whoever finds it first, I'll go with them. They'll represent me, right?
Yeah.
And I guess logically it kind of makes some sense because, the more people looking for one thing, maybe the better odds that you might find that one thing. But where it falls flat is any quality realtor, buyer's agent is not is probably not going to be willing to have that sort of business relationship with you. In other words, if you're a person that is worth your salt as a realtor, you're going to want to fully commit to that client. And, fairly enough, you want them committed to you. And I just don't think there's a lot of situations in business where that's just not going to work out if you're not both committed to one another. It's one thing, if you have different paths you're going down in something, and there's some sort of non-conflicting situations there, but it's a direct conflict to have two people doing the same job for you. It would almost be like hiring two roofers and saying, hey, you start on this side, whoever finishes first is who I'm going to pay. And you're just not going to get the same quality roof that way. And it's the same thing with real estate.
I was going to say, you think like, okay, if I have the same criteria, right, that I'm telling both realtors, I'm going to end up seeing the same property probably a couple times, right? So that doesn't make any sense at all. And everybody's time is like our most valuable resource that we have. And so, one thing is that's why it's important to buy real estate today instead of tomorrow, but also like buyer's rep agreement. So I think that's really crucial. And thank you for going into the details around that.
Here's one more point on that. If you're a buyer right now and you're looking for property and you're not in a buyer's rep agreement, you're not that person's client. You're simply a potential customer. And that does not have the same dynamic, the same relationship. It's a lot more of a, hey, if something works out, great. But no one, again, no realtor who is experienced and has the ability to, serve you best is going to fully commit and give you the level of service that you would be getting not in a buyer's rep when you're not in a buyer's rep with them. And to be honest, flat out, most good realtors are just not going to waste their time. They're going to say, if you can interview others, there's nothing wrong with that. Please, look, if you want to go meet with 3 realtors, 5 realtors, and figure out who the best fit is, don't be afraid to do it. There's nothing wrong with that. But at a certain point, you make the decision and you say, hey, look, we've decided we want to go with you. Should we work together? Great. We're all on board. Let's sign the agreement. Let's get going with the process.
Yeah, absolutely. I feel like we got into a ton of nook and crannies with all of this process. I feel like I have a much clearer picture, even though, I have some experience in real estate growing up with my mom being a realtor for 30 years, but I'm still, I guess, a lay person in that regard. And so I feel like I've gotten a much bigger insight into, okay, how do I get over the fear in the beginning, right? Like getting my ducks in a row is actually a part of interacting with these people sometimes, like bringing them into the equation to get my ducks in a row, right?
Yes.
So it's like, I don't think it's something that I need to, if I sit there and worry if I'm ready or not, and don't even know about the process or what they're looking for, right? And so I think that's probably the last thing that we can touch on perhaps is, what exactly is a lender or, going to look for approval? So I know like credit score is perhaps one of them, right? Mm-hmm. Like a 700 or...
Yeah, and so to speak on kind of the last point you said, an analogy I would use, and then I'll get to your question. If you were objectively looking at everything, let's say you're looking at another person and that person came to you and said, hey, look, I have all the means, I have all the money's not the issue, time's not the issue. I want to get in good shape. But I'm going to start working out first and then go to a trainer. Look, people do this all the time. There's nothing wrong with it. But if in this instance, if money wasn't the issue, I think you can make an objective argument that you would be in better shape going to the trainer first when you're not
Right.
ready, and saying, hey, how do I build the program for myself,
Right.
right? Now, the difference
Right.
here is for the trainer, you got to pay up front, and
Right.
it's, you're paying for sessions and they're pretty expensive. When you're going to a loan officer or a realtor or one of these other resources, it's not going to cost you anything up front. So you're kind of getting a coach, a trainer, if you will, uh, with no out of pocket upfront cost. So
Mm-hmm.
it honestly just makes sense to, if you're not ready, great. I mean, that's why we're here, right? You're going to the
Right.
gym, you're not in shape. Yeah, that's why you're at the gym, right? Like, so you can get in better shape. So there's a parallel there.
Right.
But as far as what are they going to look at? The big thing is the two big things are credit and income, right? Now, you mentioned 700, and I get this a lot. Of people are like, "Well, what's a credit score where you can maybe get approved?" And the workable credit scores are much lower than what most people think. For instance, FHA. So FHA is a owner-occupant designed financing program, right? It's backed by the federal government. It's for, when I say owner-occupant, it's for people who want to buy a house and live in it, right? And
Okay.
it's got a small
Got it.
down payment as well. It's 3.5% of the sales price. But so that program, I've seen scores in for that program now. I think most lenders, you can work it with 620 or better. So there's a
Wow.
lot of people out there that are, you know, they're
Killing
over
it.
620.
Oh
Um,
yeah.
the other thing with FHA is because the type of program, everyone gets the same rate. So if you have a workable credit score where you've got a 620 or better, you're going to have the exact same rate as someone who's got an 800 credit score if you're both using FHA. So you get all the benefits as long as you can actually be approved, be qualified. You're going to get as much benefit as anyone else. The rest of it is going to be based on your debt to income ratio, is what they look at. So
Mm-hmm.
they, and all that is, this most simplistic way to, explain it is however much you bring home a month, and then they start to, subtract your set expenses from that. So if you have a car payment, and these are revolving expenses for the most part. So your car payment, your student loans, your whatever debt you may have that you're paying off monthly, any of that kind of stuff, that will be used to factor into your debt to income ratio. And I don't want to get too far in the weeds with that because it gets a little, but
Right.
that's those are the two things they really look at. It's like, all right, do you have a workable credit score, and then what's your income versus your debt? That's the most simplistic way to look at it.
So my question, and I know we're going to cover debt to income ratio a little and like minimum maximum budget in the next episode, but
Yeah.
before we do, I want to just ask, so we're just looking like at an isolated monthly. So like I'm bringing in net or pre-tax.
Yeah, so they'll look at it on an annual basis,
Okay.
but it factors
Salary.
down to a month, right? So usually they're going to look at the last 2 years, right? So they'll look at things like tax returns to get your gross.
Hmm.
And yes, they are going off of net when you file tax returns. So if you're a person who is 1099, self-employed, uh, you will have to be careful. If you're writing off quite a bit, that's reducing your net, then
Yeah.
you're not going to get approved that way. But again, these are the scenarios where you don't know until you apply with that lender, and the lender says,
Right.
hey, look, when you file your taxes for next year, it needs to show that you're netting more, right?
Right.
So these are those type of things that you find out. Each situation's different, and you start to
I'm
get
sure.
into the weeds of your situation.
Right, totally. And I'm wondering how student loans factor into that. Because, like, say somebody brings home, I don't know, 80K a year, and they've got 80K in student loan debt. What, like, can you talk a little bit about? I mean, if I'm making monthly payments, or maybe like how much I paid towards that this year, is that what they're going to look at? Or I mean, do you have insight on that?
Go further into the weeds of where I say,
Right.
hey, I will
Yeah.
say, when it comes to credit, when it comes to, what's the worst debt you can have or what's the best negative things you can have on your credit report,
Credit
medical
card.
is the least harmful. And then I believe student loans is right in there with not being as much harm as, let's say, if you had, crazy credit card debt or, things like that. So
High interest rate. Yes,
yeah,
totally.
things like that. But so yeah, it's going to be a factor. I mean, look, anything that is a debt that comes out of your income monthly and annually will be a factor. They're going to look at that.
Yeah.
But that's when case by case basis. Let's set a plan. Let's figure this out, and let's see what we can do to make it work.
Yeah, and there's down payment assistance programs,
Yep.
right? With this, yeah, and so, and I think too, I'll just say this, like, if somebody's looking at their credit score and or maybe they don't even know, like, annualcreditreport.com, pull your credit score. I mean, they're doing it, you can pull it free every week, up until they change that. But it's
Hmm.
been like that since COVID. So look at what's on your credit, right? So you can call creditors, if that is the case, and you can, I mean, you can look into, like, without, this isn't financial advice by any means, but like this is what I've done, and with people that I'm working with in terms of, like, just calling these companies, seeing where there's like a settlement available, or even looking into like a debt consolidation company and staying current with those payments. That way your interest rates cancel out, or everything gets consolidated and you can pay it off in like 2 years rather than like 14.
Right.
So like those are some great options. And then I think too, another one is like, when I first started my credit journey, my credit score was like in the low 500s. I've seen it shoot up in 6 months. I mean, it's now like close to 700, which I'm very excited about. And it's taken me,
Congrats.
yeah, thank you. I really started getting serious about it mostly in the past year, but just this year in January, I pulled out a credit card, my only credit card, and I put 10% of my credit limit on there with bills that I already know I'm going to be incurring, like groceries or gas or things like that. So I have the cash available in my budget, and I pay it all the way down every single month. And I've done that for 6 months, and it's brought my score up to 100 points in 6 months. So, I mean,
There's a
those
lot
things,
of tricks.
yeah,
Yeah.
yes,
Yeah, there's
and
there's tricks. And if you're a person who's like really wants to start studying this and figuring it out yourself, watching content like yours will
yeah,
set them on the right track. But if you're
right,
not a person who you don't know where to start and you don't want to get into it yourself, there's also credit repair companies that just
right,
do that. That the lender
right.
lender can point you in the right direction. And then there's a difference of like I have bad credit versus I haven't built up credit yet. I
Any
mean,
credit.
most people start out without having credit. Unless you got on an auto loan with your parents or all, but there's tricks for that as well. You can do a secured loan. You can do a secured credit card, and what those are is I go to the bank and I say, "Here's $1,000. I want $1,000 loan." And so they secure the loan with the money I've already given them, and but that builds revolving credit. Same thing with the
Right.
secured credit card. It's the same thing. And something that you were talking about, which I absolutely utilize a lot, is I usually pay for most things on one of my credit cards.
Hmm.
And I've got one for the business, and then I've got another one for personal. But I pay those off in full every month for a couple of
Right.
reasons. One, the security, or why I use credit cards and pay them off every month instead of cash. There's a couple of reasons. So one is the security of, if I get a weird charge on my credit card, I haven't paid for it yet. And the credit card company will come get my back to make sure that we get to the bottom of it.
Right.
But then there's other benefits like one, like two, you're building more credit. You're keeping a credit line open, And as you pay that off every time, in full every month, you can go back and request higher limits. So now your
Right.
credit's building, you're getting these higher limits. But then you're also, I mean, there's certain cards, like one of the ones I have, where I'm getting percentages back on like everything I
And
buy.
miles, like
Yeah,
points, to
there's
fly.
points, there's miles, there's all this stuff. But one of the things you briefly said that I wanted to expand on a little bit, which I'm really glad you brought it up, down payment assistance. So a lot of people think, well, I'm not going to do anything. I'm saving for the down payment, right? I won't call that loan officer. I won't call the realtor. I'm going to save for the down payment. Maybe I need 20%, or I'm going to save up and then I'll figure it out. Well, there are down payment assistance programs that are available, especially for first-time home buyers, that you can a lot of times have zero down payment. Doesn't mean it'll be zero expense out of pocket to buy the house, but
Right.
depending on how the deal is structured, it can actually be very little
That's true.
out of pocket. So I would certainly not let that be a deterrent in at least exploring that option. You may get into it and find, hey, look, there's a better financing program for me than one of these down payment assistance programs, but it's absolutely worth every second to explore it. I mean, who doesn't want free money in a sense of, you know, who doesn't want to get a house without bringing a bunch of several thousands of dollars to the table?
Right. No, absolutely. And I think too, for those of you who are familiar with the Trial by Jennifer podcast, episode 1, I featured guest Sarah Powers, who is a recent first-time home buyer, and so she talks about her experience as a buyer on that episode, and it's worth checking out and listening because I think it's helpful to hear multiple people talking about the same subject from
Yeah.
different viewpoints to gain a better understanding. And so she talks about her experience walking through choosing a realtor and what the vetting process was for her and her goals, and then what she had intended to do with it, and then how she financed it. And so I think
Did
too,
she get
like
into
that's
what financing she used and that kind of thing, or?
she did. I think she did do the FHA, and then she used from her Roth IRA, the 10 grand to put down on a down payment. And
Okay.
she said it was like, she ended up financing like 2%
Okay.
with it. And she had a great lender at the time. And yeah, so she talked a little bit about that and just her experience with it. And she bought in San Marcos, so it's outside of Travis County. But yeah, I mean, I think it's helpful to gain perspective from all these different areas, and I love that there are so many resources available to people. And
100%.
I
Yeah.
think, it's unique to each situation, right? So each person is going to have a different financial landscape. They're going to have different goals. Like, some people are going to want something they can turn into an investment property later. Other people are, starting a family and they want a safe neighborhood for their kids. And so that's why, choosing a good realtor, choosing a qualified lender, those are going to be really important aspects, and it's so unique to each individual client. And so I feel
It
like
is.
it's great that we're demystifying this process before we wrap up. I mean, is there any last thoughts that you want to add, Morgan, on like any of the stuff that we're covering in today's episode? And I'll kind of briefly summarize where we're going for next episode too, but before I do that.
Yeah, let me put a bow on what you just said and provide my color to it. So uh, you're totally right. And when clients come to me, my job is like, I need to figure out what's going to work best for them. Every person is so different. There's so many variables. The right deal is not the right deal for everybody, right? Even if you have the pretty much on paper the exact same criteria, that house may
Right.
be right for buyer A, but not for buyer B. So there's a lot of things, but here's the beautiful part about it is we all start with the same steps. There's a process to where, yeah, of course, we're not robots, or we're not gonna just say, all right, you have to do this and then this. but there is an outline for you to follow where you can say, no matter where you're starting, you can follow this outline, and if you go through the steps fully, you will be successful eventually if you keep at it. So that's the positive side of that. That yeah, we all are completely different, and no two deals are the same when I'm representing clients, because I've got to I have my systems, and there's things that we do the same every time, and that's how we're efficient. But I kind of have to be a chameleon based off of what they want and what they need, right? So I just thought that was a good point.
Yeah, no, I think too, it's like, it's, first of all, the home that we live in is a very personalized thing, or even if it is an investment, our assets and our financial and personal health, right? All of these things are very, it's an intimate thing,
It
and
is.
so it's like, and so I think, trust is huge. This is our money. This is like what our time is going towards, and what, our future generation is going to have available to them, right? Or at least the stepping stone into transferring that wealth. So, really important things and an important process, and I'm super grateful we're demystifying it for people. And I hope that everybody who has watched this episode, that they found something useful, that hopefully it provided a little bit of inspiration or courage if there is that desire to move forward with this, and clarifying any questions or confusion that might be present. And in next week's episode, or in the next episode, in episode 3, we are going to be identifying a maximum and minimum budget, kind of going over the debt to income ratio, and what are, the differences between interest versus equity, and like where to purchase a home, like what criteria are we looking for in a home, and how to identify those things, and the different ranges. And so I do hope you'll tune in for episode 3. And in the meantime, have a wonderful rest of your day, and we'll see you then.
Thanks, friends.